Here's the thing that most people forget. We are in business to build wealth. And first of all, I say that unapologetically, and I want you to say that unapologetically. Now, building wealth is going to have a whole bunch of connotations to a whole bunch of people, and I'm expecting all the comments, so don't worry about it. I'm used to it. But let me tell you that your concept of whether building wealth is good or bad or indifferent came from the first 7 years of your life. Hey, welcome back. We're going to turn your thoughts about budgeting completely upside down, because here at Priorities, we believe that mastering your mindset is how you master your money. And here's the thing that most people forget. We are in business to build wealth. And first of all, I say that unapologetically, and I want you to say that unapologetically. Now, building wealth is going to have a whole bunch of connotations to a whole bunch of people, and I'm expecting all the comments, so don't worry about it. I'm used to it. But let me tell you that your concept of whether building wealth is good or bad or indifferent came from the first 7 years of your life. So I will challenge you in plenty of other of my content to understand what's really driving your conceptions of wealth. But we're taking it as a base assumption here, if you're hanging out to watch this, that the most important thing about your business is to build wealth. What you use that wealth for is everybody uses it differently. But let me hit a mindset thing here around budgeting, because budget is a bad connotation. In fact, I had a client yesterday who said something I loved. Don't think of it as budgeting. Think of it as money, of yourself as a money manager. And what we're doing is giving you a tool to manage your money. And I want to add to that, when we're talking about wealth, that really what wealth is opening yourself up so that as much as possible can flow in, so that you can decide where to let it flow out. And you can make sure that whatever you believe is right about money happens to the money that you earn. But if you don't earn it, if you don't let it come in, you're not going to ever be able to be the one who helps put it where you think it truly belongs. Whether that's on your own vacations or a charity or your kid's college or. Money is an energy, it's a thing that makes stuff happen. So by opening yourself up abundantly to allow money in, you're all of a sudden giving yourself control over what happens with a whole bunch of the world's energy and how it gets used and distributed. So I just want to throw that out there as a little bit of challenge and an explanation to why I do budgets backwards. So let's talk about what I think. I think you should put your business budget to the side, completely and utterly to the side, just for a moment. And I want us to start with a personal budget. And I'm using the word budget, but don't let it trigger you. I'm going to start and call it something different, and I'm going to call it our personal enough. Okay? And I'm going to come back to that word enough in a minute, because that's a whole mindset trick that your brain is playing on you that I want to show you a little bit of a thing about. So right now you think of enough as what you need to pay the bills. You may have a savings account, you may not, doesn't matter, but there's some minimum amount of stuff that you have to pay every single month. And I want you to, as step one, make a list of that stuff. And just for some examples, you're going to have rent or mortgage, you're going to have groceries, you're going to have travel, you're going to have restaurant expense, you're going to have utilities, you're going to have your apps, your phone, you're going to have any number of things. Now, here's the thing. Let's pretend this is everything you could possibly spend your personal money on. We know that's not true. But some people think that if I can pay the rent and the groceries, that's my enough. Other people think if I can pay the rent, the groceries, go to a restaurant a couple weeks a month, pay my utilities, have a few apps on my phone, that's my enough. That's what I have to do at the base level to keep my life going. And other people have to travel and have lawn care and do vacations. Whatever your list of things is today, make that list. And put how much you spend on that per month. Right now. So if your mortgage is $1,200 and your groceries are $300 and you don't have any travel and you never go to restaurants and utilities are $200 and you spend $9 in apps, you don't do lawn care or vacation, That adds up to what? $1709. That's your monthly, what you currently think, before I finish this conversation, your monthly cash need. Now, what I'm going to challenge you to do as you're building this budget backwards, we're going from personal to business instead of from business to see what's left for you personally, which is a really different way to look at things. I want you to now say, okay, I'm going to add a couple things to this list. And the couple things I want you to add to this list are those things that you currently say, gosh, if I made more money, I'd do that. Or boy, that's expensive. I really want to get it, but it's just too much money. Or any of the times you've said, I can't afford that. Or all those terms that come to you all the time about why you can't have things. Things that are beyond what your current concept of enough is. I challenge you to put at least 3 of them on this list, okay? And let's say that for you, you didn't have any travel in yours or vacation. You want a vacation and you want to put $200 towards that every month. You also saw some jewelry you really wanted to buy, and you know that every month you're going to want to spend some jewelry money. And so you need another $50 for that. And you know that you want to contribute to your favorite charity every month and give that. You want to be able to give them $100 a month no matter what. Okay, these are what I call your new enough factors. Okay, we're going to add that up, and that's going to come up to $350. Okay, cool. Here's the thing. We're going to add this to your $1709, and we are going to say that the minimum amount of money you need to have every month is $2,059. Okay, now there's a whole psychology behind why I'm having you do this that I'm not going to get in today, but stay tuned because I do talk about it in great detail, and it has to do with the stock market, believe it or not, and support and resistance. But for right now, know that I need you to redefine your enough so that from now on, your enough does not include just the essentials that you've lived on till this point, but it includes at least 3 additional things. And those 3 things can be anything you want, but they should be things like where you've said, gosh, I wish I could do that, or boy, I'm not making enough money yet to do that, or when I'm rich, I will, blah, blah, blah. Could be saving for a house, could be putting your kids in private school, who knows what it is, but add them to your list, okay? So we've just redefined a new step 1. We're going to do your personal enough budget. Why, Pam? Why are we doing that? That's because now we're going to go back to your business budget, but we're going to go back to it backwards. And what we're going to do, because this is a question I realized after working with entrepreneurs for 5 years now in very close quarters and 10 years in total, that this is really how the successful entrepreneurs think about these things. And I forget what we said our total was, but let's just pretend that we defined that our total that we want to take home every month is $3,000 a month. Okay, that we've just pulled that straight from our personal budget. We know that's there. What I'm going to say is that is now set in stone. That is now what we are going to call a fixed, non-negotiable, forever, only to increase, not ever decrease. This is a very long technical term. Fixed expense. Okay? Fixed, non-negotiable, forever, only to increase, not ever decrease expense. And no, you don't have to fit that on your chart of accounts in case you bookkeepers out there are wondering about that. Okay, so how are we now? What are we going to do? I said it's a backwards budget. Well, let's go back to what a budget is. And I'm going to skip through all the details because you can go back to video 1 of this series and see that. But I'll summarize it here. Our budget is income minus expenses equals net income. And actually, once we cut through some definition stuff, we call this first one revenue. Okay? And revenue is simply, if you remember, I wonder if this green one works. Quantity times price. And expenses, we only put them there if they fit one of three reasons. 2 is they increase revenue. 3 is they keep you out of jail. Or 2 is they keep you out of jail. And 3 is they reduce another expense. Okay, so if something qualifies for one of those three categories, ruh-roh, that was my mic. Let me put it back in here. Now you can see all the secrets behind the curtain. There we go. Ha! So there. If they pass one of these three tests, it's an or, then you can add them to your expenses. But right out of the gate, I'm saying, and we're not going to get caught up today in, we know you want $3,000 out of your business. Do I make it salary or do I make it owner's draw? That's a video for another day. It's a very easy question to answer. I have a ton of content on that. Go find it. But we know one way or another, either as salary or as owner's draw, we want to net out of our business. We want the money we have to spend, not taxable money, to be $3,000. So we're going to say for this purpose that we have I'm going to make it up, a 25% tax bracket. Okay, so that I know that I need to actually make, I think this is 3,000 divided by 0.25 is the same as, I need to make, this may be right, this may be wrong. We're going to say we need to make $3,700, and actually we'll say we need to make $4,000. That's right, we need to make $4,000 in order to have $3,000 left to go into our bank account to serve that personal enough list that we just highlighted. So this is non-negotiable. Taxes are non-negotiable, so don't forget about this little tax piece here. So we know that this actually needs to be $4,000. So we know we want our net income to be $4,000. Boom. How'd that happen? We all of a sudden know what we want our net income to be. Guess what? The rest is just math. Okay? So you can go at this one of two ways. The way I like to go at it is to say, what are the expenses I need to run my business? Okay? And since I'm putting them through all these tests, every month, this is a monthly picture, we'll just say this is January. What do I need to run my business every month? And I will say, let's just, for this example, we say we know we need some software, we have some staff, and I have a little bit of travel. And I know that each of these is contributing to my revenue. I know it hands down. It's contributing to my revenue. So they've passed one of these tests. And let's say that total adds up to, let's call it $3,000. Okay? Guess what? Let's do some math. We know now by default, and this is why it's a backwards budget, that our revenue needs to be what? Say it with me. $7,000. And now we can go and say, okay, what do I need to do to get that $7,000? And do I have what I need in place to get that $7,000? Piece of cake. I go, okay, I sell my thing for, let's call it $10. If I sell my thing for $10, that's my price, and we know that it's price times quantity. I know I need to sell how many of those? 700 of them. So I need to make sure that my expenses that I just listed out are going to sell 700 of those. And now we've created a budget, but we've created it backwards, right? And I have a ton of entrepreneurs. A lot of the successful ones will say to me, Pam, I just need to know how much I need to make. And I'll say, how much do you need to take home? What do you want to take home? Let's put some taxes on that. And I'll tell you now, I know what I need the bottom line to be. Now I know I need the bottom line to be this $4,000 so that the government can take 25% of it. That's the old IRS. And you can have 3,000 of it because that's going to take care of that personal budget we did, right? With all our individual lists on it that added up to 3,000. And everybody's going to be happy. And we know that we have these expenses. Therefore, by default, we need to make that much money. And so many entrepreneurs will go, oh, okay, that's all I need to know. I just need to know, what do you need me to make to get what I want? And I've just shown you how to do that backwards. That is the backwards budget that relies on you mastering your mindset to master your money. Have a great day. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.